According to nature of non-profit organization, humanitarian and development activities are mainly categorized food security, health, education sectors, and other. UN offices and government requires NGOs to report their program and financial report by sectors. Such categories can be considered in format code of cost center. We will not discuss about this point and about account coding in this orientation, because it is more technical topic of chart of account. Donor requirements ensure funds are used as intended, often requiring detailed financial reports with project-specific accounts to enable them to ensure if funds are tracked separately per donor and project to prevent misallocation. Reconcile the fund to separate bank account for the fund if separate fund account is required to be maintained. Take into account prohibited purchases or those paid for by a funding source that allows this type of purchase. Expense reporting. Many donors require breakdowns of administrative and governance costs, direct support costs, and program costs. Different donors require reporting expenditure by the following categories. All donors require grant recipient to report direct and indirect costs, and all donors have the common main classification for some direct costs, such as personnel costs, equipment or properties, travel costs. Also, USAID and FCDO requires grant recipient to details the indirect costs to ensure if they are entitled for overhead rate or not. But other donor may not require grant recipient to details the indirect costs. Therefore, chart of accounts must be detailed in level to customize the financial reporting based on different donors' requirements. The example of customized financial reports: reporting employers' social security contribution and healthcare insurance premium and consultant costs separately, and to post such costs in elementary accounts, enable account to have flexible reporting system, and facilitate to report personnel costs according to different donors' requirements. Another example is M&E cost. It should be separately recorded in different elementary account to enable NGO to report is separately and easily. The table that are displayed in this screen shows the differences and similarities of different donors' requirements. A chart of accounts is a critical tool for non-profit organizations, serving as a systematic framework for categorizing and tracking financial transactions. It plays a vital role in financial management, reporting, and decision-making. Now, we will explore how routine and non-routine decision-making processes affect the chart of accounts. Routine decisions involve daily operations such as approving payments, monitoring budgets, managing cash flow, and allocating overhead costs. These activities require regular expense tracking, donor reporting, and fund allocation. A well-structured chart of accounts supports these tasks by providing clear categories for income, expenses, assets, and liabilities, ensuring accurate financial reporting and compliance with donor requirements. Non-routine decisions involve strategic changes like developing multi-year funding proposals, reallocating funds between programs, or restructuring the chart of accounts itself. These decisions often require significant adjustments to financial structures, such as creating new cost centers for program expansions or adapting to major donor exits. Non-routine decisions necessitate flexibility in the chart of accounts to accommodate new funding sources, programs, or organizational changes.